All right, good morning, good afternoon, good evening, everybody. This is Will Bridges from your team here at 123Trade. We are just about ready to get started. We had non-farm payroll come out about a half an hour ago. The U.S. economy is actually looking, well, pretty strong. We had improvements in the unemployment rate. The actual non-farm payroll report, jobs report, came out really strong, talking about a better part of 1 million jobs created in the last month. So good news for the world economy, for those of you that like good news. I know not everyone's into that. but we are just about ready to get going. I just want to make sure we've got everybody looking at the right screen. You guys can all hear my voice, see what's going on. Everybody's awake. Hey, Maurice, Dava, Edwin, excellent. Everybody wake up. Well, some of you have been awake for a long time. It's still the morning here. So it's it's always interesting to have a session with people that are on the opposite side of the earth, and it's almost Saturday. so I get it. How we doing, Elaine? What's up, Evan, John, Dennis? All right. Well, we've got a lot to look at here today. We're going to be doing a little bit of a beat the market challenge. I decided I wanted to give people a better idea of really what it takes to grow a small account. So put $500 in an account, and we're going to trade it. You guys are going to get to see. So we're going to go through that here today, give you guys a little bit better idea of how I might manage risk in that type of situation. I know a lot of people are in that situation. Obviously, if you're trading a much bigger account, you do what you do. But let's go ahead and get this show on the road. Okay. First thing, got to cover our base. Trading carries risk. Big surprise, right? If you put your capital in the Forex market or any other market, your capital is at risk. You've got to risk it to get the biscuit, folks. There's no such thing as a guaranteed trade or a guaranteed investment. I made this joke last week. The only guarantees are death and taxes, but apparently I was wrong about the taxes thing. Not everybody pays their taxes. So anyways, let's get to the fun part. If you guys have questions, a lot of you have been here many times. You know what to do. Don't let me leave you behind. I by all means, I want to make sure everybody understands what we're showing in here, and why. A lot of things get drawn where they get drawn, or why we look at whatever time frame it is. If you're lost, someone else is probably lost too. So do everyone a favor and ask. But the chat box, I will be paying attention. So by all means, if you have something in particular, I've got a couple of requests here in my email already, and I think I've been requested to look at the dollar yen, a couple other things here also. So I'll get into that, and by all means, like I said, let me know if you need help, and we're going to be getting to that here in a moment. As far as in Spanish, Andres, this will be posted on YouTube later today, and you will be able to watch it. You should be able to watch it with closed captions. With Spanish subtitles, but unfortunately, hablo inglés, so I'm going to have it's going to be difficult for me to really facilitate that in this live session here. But that said, okay, our main function here is to make sure everybody that we work with has regulated, secure brokerage. Okay, we want to make sure that you guys have somebody that you work with that you can trust. Okay, we want to give you as much guidance and mentorship as we can to make sure that you have the education necessary. Really, a lot of you already have education from one of our partners, very likely. And we want to make sure you know how to plug it in, turn it on, use it. That's really what this session here is about. We're going to go through a lot of that type of stuff. There's a lot of resources on our website. If you have not been there, that is 123trade.com. And bottom line, we're building more. There's going to be a lot more stuff to come. I want to make the website itself something that you can go back. You can watch, YouTube videos like this one. That's going to be posted later. Will also be on our website. So there's a little bit of an archive there. There's a page for getting started trading. A lot of things I wish I would have done in my first, 3 months of trading that I might have waited 3 years for. Okay, so, the bottom line is that I've been through what you guys are going to go through. I have already been through it. I've already, lost some trades that I probably thought I should have won. I've made some money. I've lost some money. I've done all that stuff. I've worked with thousands of people. So I want to share with you guys, maybe save you guys a little bit of the pain and heartache that I went through, so you can learn a little bit more about yourself faster, because just something like installing a MyFX book for yourself might really change your career. But end of the day, you know, we provide a lot of access to trading rooms and software. If you're looking to reload your account, or if you're watching this on YouTube and you don't work with us, you can fund a trading account, and we have up to $20,000 of, I think $22,000 of free education and software access that you can get just for working with us. So if you are looking at reloading your account with any type of substantial amount, then by all means let us know, and we can probably hook you up with something. But we're going to do weekly training and analysis in here. I'm going to do a little bit of a market update. We used to do all of this stuff in this group every week. Okay, placing your first trade. There's videos for all of this stuff on our website, YouTube channel. If you're not in the Facebook group, then you probably should be. I'll go ahead and share that link for those of you that are not, because this is where I am going to be posting a lot of different things. But I'll go ahead and put that link in the chat box so you guys all have that. If I can find my chat box. Okay, there we go. Couple too many screens coming here. Should be in the wind. But that is the link to the Facebook group. This is what the page looks like. Also, we have the Discord server for those of you that are Facebook haters. And you know, I'm also in that camp. I'm not a big fan of Facebook, but it is very convenient, and apparently a lot of our clients have it. So, yeah, I post a lot of things in both of these groups. Occasionally, I'll post something that's not on the other one. But the Discord server is nice, just because if you don't want to get a ton of notifications from Facebook, but you want to get, you know, trade signal, trade idea type stuff from us, it'd be a little bit more focused for you, because I know Facebook tends to send me a lot of messages about, you know, somebody posting something that I don't really care about. So I don't know if anybody else is in that camp. But let's go ahead and get into the economic events for this week. I like to put out an update every week at the beginning for the forecast. I want to go through and give you guys a little bit of an idea how things actually played out, so that then we can have a little bit of a narrative for ourselves to figure out what currency pairs we might want to trade. Because I don't know, when I learned how to trade, I was just told, you know, look for a pattern. And this pattern's good, but you know, it's not going to be on every chart. So I would go through, you know, 28 currency pairs, 4 time frames, and I would look for this, you know, special pattern, you know, my pattern. And, you know, that was all fun and games, but, you know, I would much rather spend 10 minutes right here and not do all of that analysis and just go to something that I think is going to move. Okay, so ADP non-farm employment change. This came out very negative earlier this week. This is typically what some people might call a canary in the coal mine for the non-farm government numbers that come out on Friday, because ADP is private. Okay, so ADP is saying that there are fewer jobs created than the actual government, because if you come down and look at non-farm, actually let's refresh this page. There should be more fun information on here than we're looking at this week. Apply. Okay, yeah, sorry, we were for some reason, I have 2 of these calendars open. I guess that one was looking at like next week. So we'll get back to that. My apologies, folks. But German financial manufacturing PMI super high. That's positive for Europe. Manufacturing PMI of 59 in the US. That's also high. That's positive for the US. Australia is not changing their interest rate. They're sitting on it like everybody else. They're more than likely going to sit in line with whatever New Zealand does. Okay, and if the world economy is performing, China's performing, then it's safe. It's a safe bet that Australia and New Zealand might be. Okay, so Spanish unemployment change. Unemployment in Spain went down much bigger than they anticipated. Okay, so that is a more good news for the European economy. New Zealand, more incredible news, 4% unemployment rate. I think they're pretty close to tops in the world right now. New Zealand is a pretty sexy place to feel bullish, in my opinion. Okay, Australia retail sales are down. Not a big surprise. They're locking down the country. ADP non-farm employment change. Okay, so this is what I was talking about before. This is our somewhat of an indicator what we might see on Fridays. That is not what ended up happening. We ended up seeing a big number this Friday. So the market has been very volatile this morning. Lots of whiplashy activity. We'll get to that here in a moment. ISM services PMI. If you guys can't see that 64, anything over 50 is bullish. Okay, so that's absolutely wonderful for the services industry in the US. Oil is, supply is going up, so that could mean two things. Either we have more supply, or less people are using as much oil. So this is actually typically going to be something that's negative for the US economy, and typically something that might drive down the price of oil as well. This asset purchase facility doesn't seem like they're going to pull this down anytime soon in the UK, but just to show you guys what this is the Bank of England's balance sheet month by month. This is how much they're increasing their balance sheet. What that means is how much treasury bonds that the Bank of England is buying. So how much of their own money that the Bank of England is buying every month. That's what they're doing. They're buying their own money, and they're doing it to support the value of said money. Okay? If somebody can prove me wrong, I would love for you to put something in the comments on the YouTube channel or say something in the chat, because that is, in my opinion, exactly what's happening. They are inflating the value of the British pound by simply printing pounds and buying pounds with those printed pounds. They're going straight to the source. So that's really what this asset purchase facility is. And Maurice, not necessarily good or bad. It kind of depends on how you feel about that sort of thing and what you want. The reason why they're probably doing that is to most likely drive up the value of the pound, because if the UK is going to rely more on import, and if they're going to get taxed by places like Europe, then it's probably better for them to have a more valuable pound so that they can overcome the taxes imposed by the European Union. So I'm just going from a strategic standpoint. That's just what I think is happening. And a big reason why I think that they left the European Union is so that they could do something like that and control their own monetary policy. Typically, they're going to need, well, let's just say they're going to be doing a lot more import. Yes, absolute manipulation. Every market is manipulated, Maurice. All of them. The U.S. government is also buying 120 billion per month, I believe, of their own bonds. Might be more than that. It's a lot. It's in the trillions per year. So pretty much every major economy is doing that to some level, but it's really sticking out in the UK. They are really dedicated to the game when it comes to buying their own treasury bonds. But that being said, these bank votes, all this stuff didn't really change. As far as from the forecast itself, if they decide to raise interest rates in the UK, that's another reason why I would be bullish on the pound. I'm very bullish on the pound and the New Zealand dollar more so than anything else. The U.S. economy appears to be doing very well. Canada, on the other hand, not as well as expected. Unemployment rates are going up. There's unemployment claims in the U.S. are still high. 385,000 is a high number. I don't care what anybody says. They're celebrating it on the news like that $14,000 dip's a big deal. Frankly, I'm looking at this and I'm thinking that, we had considerably fewer people claiming unemployment, at other times. Pretty much any time before March of last year. So absolutely unbelievable how high those numbers still are, and people, I guess, are trying to paint it rosy right now. So, take that with a grain of salt, whatever it is. But the non-farm employment change, almost 1 million jobs. That's huge, huge, in the words of our former, but absolutely huge. So this 0.4%, that's not crazy impressive when it comes to average hourly earnings. If we look at this here, okay, this has been very volatile. So if anybody has any questions about this type of stuff, these numbers aren't as important as what's happening on the chart. Okay, that's really the most important thing to understand. I'm just looking at these numbers to figure out what I want to trade and what might have a trend on it, because the market just gave us some information. When I say us, I mean everybody on Earth. It just told basically everybody that New Zealand is killing it. Things are improving in Europe. Things are improving in the US. So, I might bet against things like the yen, which is typically going to be something that people buy a lot of yen in economic downturn. Same thing goes for something like the Swiss franc. So now that we know that, I'm going to pull up my charts. Actually, I'm going to change the the account that we're looking at here. I want to do this little beat the market challenge with you guys. I want to give you guys, we started this account with 500 bucks. I just want to show you guys really what I would do to grow something like this. And, obviously things go well. If an investment's working out, most people want to add more money to their investment. So I want to show you guys really over time what that might look like. Because I know a lot of people are new. A lot of people are looking for the truth. Truth is out there, like the X-Files. Aliens are real. But first things first. Okay, so we did talk about Canada having worse numbers than anticipated. We talked about New Zealand being potentially the most bullish place on earth, but we did say that, maybe the NZDJPY might be a good place to look. Okay, because maybe we're going to be very bullish here. Okay, it does look like we're at a little bit of a high. We are in an uptrend. Okay, so let's go ahead and hit the all-time frame. I'm going to do all the analysis here. Make sure everybody has a good feel for where the boundaries are in this market. So I like to draw trend lines from left to right because that's the way that time works on the chart. So I'm going to go ahead and draw our big pennant here. So we've got kind of a sideways signal here. Okay, but we don't really have anything that tells me like, yeah, you can buy right now or sell right now. I don't really have anything like that. Okay, so what I might want to do is add some inner trend lines. Okay, so I've got a couple here. Okay, I just want to know what the recent boundaries are in this market. So let's come down to a slightly lower time frame. I don't think I have a real clear-cut thing to draw here on the bottom. It does look like we've got somewhat of a crown formation up here. If you guys can see what I'm talking about, I'll go ahead and draw this actually so you guys can actually see. But this is what I'm talking about with this crown. So this could be what we're looking for here. That being said, I'm not overly interested in trading pure technical on this because, well, we just went through and we basically assessed that New Zealand is the strongest economy on earth. And from a fundamental standpoint, it really doesn't make sense. This has also been an uptrend for a considerable period of time. One of the easiest litmus tests that any trader can take is just looking for higher highs and higher lows. Okay, and this is the weekly time frame, so this is gone on for quite some time. And I'm going to just show you guys where these lows are. Here's one here. Here's a higher one. This one's actually a true low. Okay, at least on the daily time frame and lower. Okay. So we come to this daily time frame. This is a true low. Okay, we've also got a higher low right next to it. And yes, it did look like we were somewhat going to be maybe bearish for a long time on the high time frame. But since I already know that New Zealand is extremely healthy economically, and there's really no reason for New Zealand to be taking a beating right now, Japan has been trying to lower the value of the yen since I was born. We are getting a fresh high from this week versus last week, so we're making higher highs right now. And if we're looking at this like it's been an uptrend for the last year, because it has been, we just broke out. Okay, so that's a very good sign for the fact that this thing may continue upward. And just to show you guys where that has happened before, similar patterns. Okay, there's going to be lots of these as you work your way up, and some traders are just going to look for stuff like this. Okay, they'll just look for counter trend line breaks. There's lots of them. Okay, lots of them. So if you had been thinking that this was an uptrend for quite some time, maybe because of this first trend line breakdown here on the bottom, that big one, okay, then maybe since we've got a little bit of a bigger downstroke here, we might get a bigger upstroke. Okay, so what I want to do is figure out where we are in the waves, and I'm going to do that pretty straightforward with this ABCD button, and I'm just going to click the bottom. Okay, and we've already formed an extension on wave 3 here. Okay, it does appear that we're going to have to break this potential trend line here. And really, I've got a double top here, so it might make more sense to have a range than it does to have a line there. Okay, so if this is the range that we just got back into, because the market was in this range for, well, let's just say all of this time over here. Okay, that's really where we were in this range. I'll make this another color just so you guys can see what I mean. But that was a fairly, long period of time. It was about a year that we spent there. Okay, so if the market wants to play around in this range, then, maybe it heads towards the top of this range, and all I need to do is figure out, where I can manage my risk and maybe trade towards the top of it, because at the end of the day, this thing, has already broken out above. It's already come down. We haven't necessarily hit super far down lows in our current wave. Let's check the 4-hour fibs. Zoom out here a little bit. Ooh. I might actually delete this one and draw another one. Let's go back to the daily. Just go ahead and delete this, and I'll draw a fresh one on the 4-hour. Just because I want to know where we are in the wave. And on each time frame if possible. The daily is my favorite time frame because I like to swing trade. I'm lazy. Not so much that I'm lazy, it's just that I don't really see a whole lot of benefit in spending all day changing my mind several times about something. It feels like work. Okay, so I just pulled this on my 4-hour, and now I can see that we basically hit, our 618 retracement level. Okay, we made a new high after that, and my extension above, a little bit higher than my box actually. So what that tells me is that if I draw a quick line here, just measure where I'm at. Okay, there's my blue line. Let's get a stop loss. Maybe if I use this previous low here. Okay, my extension may be as high as all the way up here. I'll just use my box because I drew that there for a reason. Maybe we break out of it, maybe we don't, but I'm going to be conservative. Maybe we just see it, kind of get real close, because now that I've redrawn this, okay, there is reason to believe we could get higher than this box because there are targets to hit up there, but generally I don't need to bank on that. I would rather just get out where the market has turned around in the past, because that's really, the best thing I can use. I don't really know where the buyers and the sellers are other than by what's happened before, and I know that there are a lot of sellers here, again here, and all the way back over here as well. Okay, at the same price that I would be aiming at. So I don't really want to push any further than that, and given our risk reward ratio I have in the bottom, I probably don't even need to push that far. I could probably reel this in, aim at maybe my green Fibonacci levels that are there, and give myself a little bit better opportunity of getting out, taking some profit. Maybe I lose this trade. That's the one thing that you always need to pay attention to on every decision that you make. So what I need to do is measure how far this is, okay? So if I measure how far this is, currently, okay, to my stop loss is about 160 pips, okay? Top side, we're talking about 363 pips, okay? So if I'm trading an account with $500, okay, and we're talking about a risk of, let's just say 158 pips. Okay, I'll pull up my equity management calculator here. $500 account, I've already got that punched in, 158 pips. Okay, if I want to risk, 1% of my account, I can't do it. So realistically, I'm going to be risking, 4% of my account, 3 or 4% of my account, somewhere between there. So it's very much, something that I'm going to be over leveraged no matter what I do. Okay, so the thing that you have to understand is that you don't want to trade any bigger than maybe a 0.1 if you have $500 or less in the account, because you're always going to be risking too much. So that's why, trading is about building wealth. If you're good at trading, then add money to your account. But for the time being, I'm going to trade the minimum amount because that's all I can afford to do with my account to stay under that 5%. Okay, that's really what I'm going to do here. Okay, so in looking at this, I've already kind of decided I want in. I may risk slightly fewer pips. Okay, so that way I don't necessarily have to worry about being over leveraged as much. Maybe I come up a little bit higher. We've got lots of turnarounds that happened previously, above that line. If you guys can see all these over here, let me lock this tool up and circle a bunch so you guys can see what I mean. But these are lots of turnarounds above where my stop loss would be, and I could obviously have it at that 158 pips outside the box. We've already made several lows there, so I'm going to go ahead and just buy this thing. Okay, I'm going to measure out my stop loss one more time because I did shave some pips there, and the market has started moving up already. So 122 pip risk. Okay, So this is a roughly, with a 0.01 here. Okay, this is a risk of, $12. Okay. 10-day, if you want a copy of that sheet, just send an email to brokers@123trade.com. And then my top side, opportunity. Okay, what we're looking for here, I'm going to go ahead and measure this out. We're looking for 360 pips. Okay, so I'm going to go ahead and type in my 350. Okay, I'll get out earlier than I even wanted to because, heck, we've got better part of a 3-to-1 opportunity. If this thing goes my way, I'm going to click buy. Okie dokie. So the beat the market challenge has begun, and then you guys can see obviously there's a lot less leverage here in the United States. So used margin is actually seems very low. That doesn't actually make sense to me. I think because I'm fairly certain it costs about $60 to open this type of trade here in the U.S. But let's keep on moving. Okay, so we talked about the NZD Swiss already, and I think we've kind of belabored the point on this thing. But let's come down to the NZDCHF, New Zealand Swiss. Okay, so very similar type of opportunity, I think, here. But let's go ahead and show what's going on. And long term, okay, long term, if I use all of the data back to 2005, this is a pretty massive crash here that happened in 05. Pretty interesting. I might want to go back and see what actually happened there. But really, this is our uptrend on the bottom and our trend on the top. This is what we're working with. Okay, that's what we're working with. And reality, minus this little aberration that happened in the middle, this line might actually be perceived by some traders to be here because we had all of these tests that happened several times. 1, 2, 3 times here, and we broke that backside test. I'm doing this trading session with you guys, working for a company called 123Trade, and this is a 1, 2, 3 right here. Okay, so that being said, I feel pretty good about the bullish activity on this NZD Swiss because if the world economy is going to recover, people are going to be panicking less, then they're going to get out of things like the Swiss franc because it's somewhat of a hedge. Okay, that's really what the Swiss franc is. The Swiss government invests heavily in other countries' currencies so that they can act as a hedge. Okay, so a lot of people will funnel money into the Swiss franc when things seem to turn downward across the world because, hey, they're going to kind of have a mixed bag, and it's basically like having a mutual fund. Okay, that's really what I look at, the Swiss currency being, at least lately, for the last, 100 years or something. So let's come down to this lower time frame here. Let's hit the weekly. Okay, weekly. I'm going to get rid of this, big 1, 2, 3 here. I think we made that obvious. Okay, if the week finishes where it's at, this is a really amazing piercing line symbol. Okay, this right down here. Okay, if you guys like Japanese candlestick patterns, that's a piercing line. Bullish engulfing candle. If you're going to look at it even lazier and only look at the last candle instead of both of them. But reality is that's a bull signal. And not to mention, this thing's been falling very slowly. Okay, prior to that, massive uptrend. Okay, so realistically speaking, I think we're in for weeks and weeks of bullish activity. So if that's the case, okay, and I come down here and I look at this, and we're screaming. The last 5 days, this thing has been screaming. I guess 4 days. We're on day 4 of awesome activity for the NZD. Okay, a lot of people may be freaking out. Now it's time to sell this thing again. I don't think so. Okay, so that being said, we are at somewhat of a high price. Okay, so just to give you guys an idea of what I might look for here, I'm gonna have to come down to a lower time frame. Man, this thing's moving. Okay, so I think really gotta figure out where we are in the waves. We might be in breakout territory. I might be able to buy this thing right now. Okay, I need to figure out where I can put my risk. Draw a couple of lines here. The first one, easiest one for anybody to draw, this blue line is the current market price, and you need that for perspective. So you can understand what your risk reward ratio is, because if you don't know it and you don't understand how much money you're risking, then you're going to be, biting your fingernails off all day long, sending panicky messages to people that know how to trade. But reality, that's where I want to aim, with authority. You know, and I might be in right now. Bottom line, this isn't a massive, I think this is a highly likely trade. Okay, 32 pip risk to try to capture 43. Okay, so now, okay, this is more of a scalping type of opportunity. Okay, so if I'm going to risk 32 pips, okay, with my $500 account, okay, if I want to risk 1% or less of my account, then I'm going to need to do, you know, the minimum. I'm going to need to do a micro lot. Okay, and I can't even do less than 1%, really. So, you know, that being said, I'm going to do the minimum. Okay, I'm going to go ahead and click on buy after I get my stop loss, 32, try to get 43, and we're going to click buy. Okay. And we're moving. And what else did we talk about being bullish here today? We talked about, you know, that the UK seems to be really dedicated to pushing up the value of the GBP. So if I'm thinking that, you know, the UK Bank of England is dedicated to that game, then maybe I'll go look at the GBPJPY. Okay, this one seems to be screaming today too. Okay, so a lot of this is based on the fact that the world economy is recovering. So if I got a lot of good news everywhere in the world, that's basically telling me that it might be time for more risk on, which means less investing in the yen, at least in my experience. So this is, you know, I'll come to the all time frame first. I don't want to skip any steps on this. Okay, so we come down here, left to right, you know, as usual. Okay, that's not really a useful line, so we're gonna have to draw more. Okay, this is what this was. This was a big megaphone for a long time. But more recently, since these lines are useless, okay, and they don't really help me find any structure in today's market, I want this line, okay? And I want this one on the bottom here because that's really what the more recent trends are for the last, I don't know, 15 years. So we've just broken this uptrend, okay? So we worked hard to get up there too. They spent, you know, $1 trillion to get there. so that being said, you know, I think bull. It's been bull for a long time. Let's come down to the 2 hours. Okay, this thing's moving like a rocket. Okay, let's go ahead and get a fib on the bottom here. Oh, I missed. Let's get a fresh one. Ah, man. I got an itchy trigger finger here today, folks. Sorry about that. So I think this is the same opportunity, breakout style trade. I'm going to go ahead and look for an exit price somewhere above here. Actually, let's use a line, not a ray. This is where I might look for an exit. Current market price, I'm going to make this in blue for perspective so I can see if the risk reward makes sense. And I'm going to come down, maybe put a stop loss somewhere pretty close because, hey, why not? We've got massive bull candles for the last 4 hours and this thing's breaking out. So maybe it just goes where I want it to go. I'm going to go ahead and put a red line down here in the bottom. Okay, and this is another scalping type of opportunity. And I'm going to be doing this a little bit more in these sessions just because, well, if you're trading $500, you got to be aggressive on the smaller time frames. Otherwise, you're going to be risking incredibly too much on every trade. This is a 56 pip risk, 109 pip opportunity, 56. Okay, 109. Okay, I'm going to go ahead and click on buy. We're going to do the minimum because I'm over leveraged all the time right now. Okay, that's really the thing that you have to understand is that the best traders on earth, okay, the people that are trading millions of dollars for other people, they're not getting 100% return every week or every month. Okay, they're getting a, 4% per month, maybe 5%. If you do 5% per month for the whole year, you're talking about 80%, okay, which is an incredible return. Any of you that have a retirement account, that would be happy with an 80% return this year, raise your hand, because all of you would be. There's absolutely nobody that wouldn't be. But here's our GBPJPY. And let's go ahead and check out our GBPCHF, okay? Wow. Another one that seems to be screaming. I wonder why. Okay, so let's go to the month. Wow. There's two types of prices here, folks. There's high and there's low. And right now we're looking at a pretty serious, low. Okay, and anybody that trades, Elliott Wave, for example. Somebody asked me about, I think Evan asked me about Elliott Wave earlier this week. And let's actually just pull that up. I'm going to just show you guys the Elliott Wave formation that exists here and what I think may happen next. So it starts at the top here. Here's wave 1, okay? There's our retrace wave. Here's our speed wave. Okay? Retrace, exhaustion. Okay? So what that means to me is that we may come back up and test our level 4 up here. Okay? So I'm going to go ahead and draw a little box here. We've got lots of popular prices at the top of this box. Okay, we've got popular prices at the bottom of the box. And we've got lots of bullish activity from there. I'm going to make this actually clear so you can actually see this. There we go. And now let's come down to the weekly. Okay, so what we are looking at now is that this thing, well, it did push down with authority. It could come down lower. It could come down and test our lower levels here. I may not be as aggressive on this pound Swiss, just looking at where our demand zones are on the lower time frame, because it does look like, some people might want to come down and test these prices below here. Okay, this is what I'm talking about. I think that this zone here would really be a place where I would be more interested in being a buyer. Okay, but we may have already missed that opportunity. That's the thing that people need to understand. So the thing to do might be to just set a pending order somewhere down here in this price, if this is not going to work out for us. Because you have to understand, it doesn't always, just because I think something's going on, as far as from a fundamental standpoint, doesn't mean that I'm right. So I always have to be able to back up what I think with my risk. Okay, so that said, I want to get closer, better idea of what's coming. It's coming on the lowest time frame here. This 2 hour, I say lowest, one of the lowest ones I look at, because I don't really find a whole lot of value in looking at things like the 1 minute chart very much. But we did have a little fake out on this breakout here. This could be, a lot of traders may change their trend line here and have it there. This is where the trend was for, I don't know, from this trend started in June. And we broke out down here in July. So this went on for a few times. We tested this line that I have here, 1, 2, 3 times. So kind of a trader's choice on what you do with that and how you feel about it. Personally, if I'm gonna look for a scalp and it doesn't necessarily matter if I'm right every single time, then, I might just go ahead and look for an opportunity here. Okay, and what may happen in the near term, okay, this thing could continue this little wave we've got. I'll go ahead and draw that so you guys see more or less the vision. Okay, they could do something like this, come back down and then go up. Okay, could do a lot of different things. Okay, there's really no way to know 100%. But, just in my own experience, price action is a fun thing. It's going to hit resistance up here above unless it decides to blow through it for some reason. Okay, which happens. Okay, that's how people win trades. So that said, a lot of people might be looking at this trend line that I just kind of noticed here, a little bit more clarity. And this is the only reason why this one's not quite as sexy. Okay, actually, let's get rid of both of these here so I can clean this up for you. It's because we're not necessarily making higher lows. Actually, we really have. This is a higher low on the right. So I don't know. End of the day, it doesn't matter what we think. It just matters if we can manage the risk. So situation like this, I could look for another box, another range in here. Okay. And this becomes where my sandbox, so to speak, would be. And I'm going to look to get out before I get to the top of my box. So I'll go ahead and draw that. Get a little green on here. Because the market's made up of two things. It's made up of sideways trends and up and down. That's really all it does. There's another guarantee in life. It's more bars to the right. So, it's something that you should really try to keep simple as much as you can. The more complicated that your strategy is, the more likely it is that you screw it up. Okay, so obviously you guys have heard me talk about a lot of economics, whatever, and that's all well and good. But it doesn't matter what I think about all that stuff if there's nowhere for me to manage my risk. Okay, so, and if it doesn't make sense for me to manage my risk in this way. If this market continues and creates a lower low down here, I want out. Okay, bottom line, literally my bottom line. Okay, so this distance here, 145 pips. Okay, 300 on the top side, and we're not even looking for a breakout. I feel good. I'm gonna go ahead and do it. 300. What was this down here? It was 140 something. 155. Okay, I'm gonna go ahead and click on buy. Oh, Maurice, I'm not gutsy. I'm just not risking a lot of money. So that's the thing that everybody needs to understand is that, you know, your decisions are going to be less impactful if you put less money behind them. So for me, this $500 account is not a big deal. Okay. And really anybody that's trading with $500 should feel the same way, because at the end of the day, it's not a lot of money. So, you know, really you've got to get to a point where this is just a game, and I don't have to win all the time. You know, all I have to do is win. You know, if I win half the time, then I'm going to be profitable based on my risk reward. I'm going to have a stop loss on all of these. So even though I've got all this information that we've compiled in this session to figure out up, down, sideways, whatever, and which currency pairs we wanted to look at, okay, it really just comes down to what my risk reward ratio is, because I could be wrong. And, you know, the powers that be, whatever you want to call them, the government, the deep state, depends on what side that you're on, then, you know, by all means, you know, you could trade this the other direction if you wanted to. You could sell it right now. And some traders might do that. Just to show you guys what that might look like, go ahead and clear this. I'm not going to be able to trade this both directions, but you guys may be able to do that. Okay, so some people may sell this right now. Okay, and the reason why they may do something like that is because we've got a current price here. And just for the record, you know, both of these trades, the one that I'm about to show you and the one that I've already shown you, could just as easily both work out. And we could be in totally different directions. But some traders may look this way. Okay, some people might do that. Okay, and just look for this little retrace. Okay, but that's within my stop loss. If the market comes down and does that, I could always just, you know, buy again. You know, because I am bullish. So it's really a trader's choice how you want to manage your entry points and how many times you want to jump into positions. But the reality is that we're already risking 4 or 5% of our account just with these 4 trades that I've got open. Okay, so yeah, Maurice, it's very much something that some people are going to be more aggressive in the short term, and some people are going to be, you know, more aggressive in the long term. So it's all about perspective, and some people are going to be looking the opposite direction as you, and maybe both of you are right. So it's really kind of depends on how you're managing your entry points and managing the risk. Okay, that's the number one most important thing, is how can I afford the risk that I've taken? Okay, so at this point we've already made a decent number of risks. Does anybody have? Okay, I think the USDJPY was one that somebody wanted to see here, and this one actually might be a good candidate for the same type of bullish activity. So let's actually clear this out. It's like this trade that we showed in here. I'm not sure if this was in this session, but we entered up here. This actually worked out great, to say the least. I'm not sure if you guys can see that, but we have been very bullish. Okay, very bullish, especially since all the amazing news came out for the dollar. Interesting how that works, right? Interesting how that works. Let's go ahead and clear this screen out. And, you know, a lot of people have been very bearish on the American economy here lately, with good reason. Okay, but, you know, obviously there's a coin toss situation. The market can always do whatever it thinks is necessary. Okay, when it comes down to it, the invisible hand is going to do a lot of work, because if prices are low or prices are high, people are going to buy more or less of things just because they don't have as much money to do it, or maybe they have, you know, less opportunity, whatever the heck it is that's going on. Okay, so if we take a look at this here, okay, there's one thing that we've been looking at. We've been looking at this range here that's been happening, okay, for quite some time. There's also another bigger trend line. Well, there's this one on the bottom here as well. So we had been looking for a potential dip back into this downward funnel. Okay, and that may return, we may return back to those levels as soon as they decide to stroke a, the bill for $3.5 trillion and lead us into the Green New Deal and do all this other stuff that they're trying to create, another $20 trillion in the next 3 years. Then yeah, that'll drive the dollar down. But that doesn't have to happen right now because we're getting good news. People are getting jobs. 1 million more people need a paycheck next month. Okay, so if we come down to our lower time frame, let's hit our weekly. Okay, we may have finally broken through on this little uptrend range here, but we've also got this trend that's a little bit more obvious. A lot more people are probably looking at. Okay, and we've broken through that, and we've got great news for the world. So that means that maybe, the cost of oil might come up. That's bad for Japan because, well, generally they import and export anything that comes to the island that they operate, and it is the 3rd largest economy on Earth. So oil is going to have a very, very big impact on Japan, more so than really any other country on Earth, barring maybe Canada. Okay, so that said, okay, we're going to be bullish on this USDJPY, but the question is for how long? And personally, I'm not committed to this thing being bullish for a really long time. Okay, really not. Okay, so we've already seen this broken uptrend, so I don't care about that anymore. Okay, so what I'm going to look for is where might this thing turn around? Where is the next high? And there's a really easy button for that. Okay, if I go ahead and click Smart Resistance. Okay, so this is the weekly time frame. If we want fewer, we want the heaviest levels. Okay, here we are. Okay, so we've got overlap. R3 and 4 are roughly at this level above. We've got this other R2 level, R3 are also very close, not super far from where we are now. And I may just go mark those, leave myself a little breadcrumb. Hansel and Gretel would be proud, but there's where my exit may be. And I'll come down to my lower time frame. See where I've got my exit line. Okay, that may be where I want to aim. May not be a great time to get in right now because, well, all depends on the risk-reward ratio. It's really what this is about. Risk to reward. Is it worth it? And, maybe it is and maybe it's not. Depends on what your opinion is of worth it. Okay, this is better than a one-to-one opportunity. Not crazy better. Does seem relatively likely to me, given the amazing news that just came out for the US and most of the world this week. So sentiment might be very powerful towards the upway, and just based on what's going on fundamentally. And we knew that before we got here. And outside of that, we also have what's called a counter trend line break that just happened this morning with non-farm payroll. So that could be our signal. So what I'm going to do, move up my stop loss. I'm going to be more aggressive. Okay, so I can have a better risk reward ratio, because if we do come down and break this low here, I'm not confident that we continue up. It'd probably be because something catastrophic happened, like maybe Congress showed up for work today and actually did something that might be catastrophic for us here in the US. So let's go ahead, set this guy up and measure our risk. Current market price, talking about 92 pips. Let's try to get 179. So 92, 179. Okay, this is about a $9 risk. Something like if I bought a sandwich later today, I probably wouldn't be worried about it. I'm going to go ahead and click on buy. I just bought a sandwich. Actually, sandwiches are more expensive than that here now. It's crazy how much prices have changed here lately. A Big Mac has gone up so much in price. But generally speaking, I think we are cased out on this dollar JPY. I'm actually done opening positions. I've already opened up 5 micro lots in this $500 account. And really, I'm going to be risking $10 or so per. So I'm way over leveraged right now. Okay, but I'm not worried about it because we're talking about $50 at the end of the day. And I plan to add more money to this account. Okay, so assuming that I trust myself and my skills, and nothing's really happening right now. We're down by the spread. All of these pairs that we're in have a tendency to move pretty quickly. So, a lot can happen. Hey, maybe we go in the mud for a while. Maybe the market goes straight our direction. I don't know. But end of the day, I do have more dry powder, and I can place more trades if I need to, if the market comes against me and I want to get in at the better price. That said, I'm done opening trades with this account today. I don't want to open anything else with the $500 that's in it because I don't want to worry about over leveraging, over trading. Those are the two biggest mistakes anybody makes, and that's the reason why we're doing this Beat the Market challenge, because I want to show people how to grow an account. Okay, there's no such, I'm not here to teach you guys how to gamble. It's a waste of everybody's time. You could waste years gambling on something like this, and I've seen many people do it. Okay, so anybody has anything in particular that they want to see that I have not yet shown, now is the time. Speak now, or until next week, hold your peace. Euro Aussie. We had a, I think we won the trade we had on the Euro NZD this past week, because that did come down with authority. I think we were like 230 pips, something like that. So Euro Aussie, let's see what we got. It looks like we have a, I've already set this trade up. I guess we're done. I'm just kidding. Just kidding. But anyways, let's come down to the all time frame. Okay, all, because I want to know what's going on and really what the top side looks like, what the bottom side looks like. So here's our most recent high. Here's a lower high on the right of it. You know, so I'm going to assume that this is our range. This goes all the way back to 93. So we've got tons of action that happened all the way back here around the price that we're at right now. Like if we pull up current market price, or really just where this high is, tons of previous support at that price where the market started to fall like a rock. And really prior to this last 4 or 5 months, the euro had been falling like a brick. I think that continues. Probably not looking for a buy situation here. May have been in the past. Apparently we were, which is why I decided to come down and look at this again. But here's our trend on the bottom. Okay, more fun. Okay, looks like we tried to break out of that. Really kind of moved up after that. We got lots of resistance above. Okay, but end of the day, okay, this is our high on the top, and this is what downward pressure is called. Okay, this is downward pressure. Okay, if you're wondering what that is, that's downward pressure, because we tried to get up into these higher prices and the market fell like a rock in a hurry. This is thousands of pips that the market went up this month and then came right back down like it hit a hot stove. Yeah, we can check out gold. We can do that once we get done with this. Everybody likes to trade gold. I can't actually do that here in the US from my Forex account, but I can show you guys how you can do that in yours. But let's go ahead and come down to our weekly time frame. And weekly, okay, just to take a quick peek here, okay, another bearish signal if this thing closes out where it is, okay, because this is very much a dark cloud cover. Okay, we're getting a strong bull move upward followed by a strong bear move, almost the same distance, especially if it closes out down there, more than 60% of this bull wave. Okay, so if this is really eclipsing that uptrend that's been happening for weeks, we might be in store for several weeks of downtrend, okay, which is something that might be pretty profitable for us. The only issue is that Europe, we're talking about improved strength. Australia, they're somewhat locked down, so not a whole lot of strength, okay, but if people are not working and the markets are in a lot of pain, then people are going to pull assets out of things like the stock market and push the value of the Aussie dollar. Not to mention manufacturing is still doing okay there because they get heavily supported by China's economy. Okay, so this is really kind of going to, in my mind, going to be a sideways type of opportunity. I don't anticipate this one to really break out, and neither does the market. It hasn't with our little formation here, so this might just be something that I look for a sideways trade on and just look at this range here. On our 4-hour time frame, let's go ahead and just draw this guy. And this may be my point to buy right now. No reason on earth why this thing shouldn't be sideways, in my opinion, just because they've got conflicting signals, and we're at a low price. So this means to me, I just want to try to manage my risk. Doesn't matter what I know, just matters if I can manage my risk. Okay, that's what this is all about. Okay, if you aren't good at managing risk, you're not good at trading. That's really the best advice I can give. You know, if you're bad at managing risk, man, trading is going to be a rough job for you. So all you have to do is control yourself and not go too hard on everything. You know, it's because right now is a situation where I'm doing more analysis. I could very easily try to pull the trigger on this trade. Let's go ahead and see what we've got for a risk. Okay, because I actually like this one a lot. I'm talking about risking something like 55 pips to try to capture, 90 pips. We got a little tweezer bottom down here forming on our 4-hour time frame. This could be a great opportunity. Could also be a loser. I don't know. We'll find out later. But the truth of the matter is that this has been an uptrend for since March. So to think that it might go sideways for the next couple of days wouldn't be blasphemy. I don't know how much science that I would need to prove this. But this has been an uptrend. And frankly, the trend is the trend until it's not. As much as I think that this thing might be headed for lower prices or whatever, this is what it's doing. It's making these higher lows. Okay, it's just working its way up. Higher highs are happening too. Lots of them. Okay, so I'm going to expect that to continue until it doesn't. Okay, and really I'm not even expecting that to continue. I'm just expecting that to test at this price. So I'm going to go ahead. I'm going to do one more 0.01. Now then I'll have 0.06 in the market in total, somewhere around $60 worth of risk on this $500 account. So if I blow all these trades and lose all of them, oh my gosh, I'm down to $450. What am I going to do? Probably put another $500 in it in the next week and keep working my strategy is probably what I'm going to do. Okay, so let's go ahead and just place this thing. Let's go ahead and do it. This isn't a wide risk that we're talking about. I mean, if we're talking about, 53 pips to try to get 85, sure. 53, 85, I'll risk this $5. I'm in. I'm in. Is anybody sweating yet? I'm just kidding. But anyways, I like to have fun with this stuff because I know that a lot of people start small because they're new, and that makes sense. Could I explain how the calculator works that I showed? Yeah, I'll go ahead and pull that back up. So basically all I did is I type in the account balance here, okay, and that's 500 in this account. The number of pips that I have at risk on whatever trade it is. So this last one that we just opened with, I think it was 52 pips, something like that. Okay, this is going to tell me what lot size I need to trade for each level of risk. So 0.01 is actually already bigger than 1% risk on that trade. Okay, so that's $5 is really a 1% risk on this account. So this is just telling me what lot size it's spitting out. Okay, so a 0.02 is roughly 2% risk. 0.03 is roughly 3% risk. So that's really how this works. And really, if you wanted to, if you're looking at this and you're like, I don't understand, it's probably because you're looking at too many. I probably could have changed this before I shared this with people, but you just move the decimal places. So if I want less decimals, it'll round for me. So now I can have a better idea of what I should be doing. But yeah, that's how that works, Roger. And if you guys want that calculator, then just send an email to brokers@123trade.com, and I can help you with it. But really, that's the most important lesson for anybody to know is how much money am I risking? Okay, gold is going to be much different. Gold is what's called a contract for difference. Okay, and I think gold is likely to be bearish. Okay, for all of the reasons that we mentioned before. Okay. Let's come to the all time frame on gold and look and see how far this thing is likely to come down. Maurice, if you have Google Docs, then you can probably open the calculator with Google Docs. That might be the way to do it. But let's go ahead and draw our long-term trend here, and this has been a fun one. Okay, I think gold. Well, let's just say long-term I'm bullish on gold because it's gold and it's been holding its value for thousands of years. So things that hold value, that means basically that there's bulls in the market forever. Okay, I'm not concerned that gold is gonna, go to zero anytime soon, but I do think it's gonna come down for the same reasons that it did the last time we had a massive crash over here years ago. And, you know, everybody might have forgot we had Joe Biden was the vice president when that happened. So whatever it is that they're doing right now, I don't know if I like it or not, but it doesn't matter. It just matters what happened last time. Okay, so Biden and Obama drove down the value of gold somehow, okay, while they were in office. And I don't necessarily know that it was even them that did it, but I know that a lot of the policies that they create are geared towards specific markets having less or more regulation than others. And if we have the same person driving that bus, writing a lot of, you know, really executive orders to get things done right away when he got in office, then you did not get the Euro Aussie. Well, we'll come back to it in a minute. I don't want to change gears in the middle of this gold, but we'll come back to it. That's not a problem. But essentially, this thing's been making bear moves in the recent, you know, lower time frames. Let's come down. I'll show you guys what I mean by that. On our weekly, and if we look at the weekly, okay, one thing I want to know is where is the trend line? Okay, it's down here. Okay, so we could come all the way back down to test that trend line at much lower prices, and I think that that could be, well, I'll show you where. I'm going to use something straightforward like my ABCD tool. Okay, and we came up into our red zone above. It could be as low as this price all the way down here. This is where gold might be headed, down to $1,500, okay, and lower, okay, which wouldn't be crazy surprising. You know, not a lot of traders are going to chase it that far for a lot of reasons. Let's come down to the day, okay. Also happens to be where our fib level still is, and we're still looking at a 618 retracement, looking for the red level below. That's $270 under the price that we're at right now, and a lot of people are thinking that that's a crazy price that's not possible. Maybe you're right, but that's the same thing that people could have said over here when that happened. Because, you know, this 1900, whatever, these prices have been seen before, okay? And, you know, the velocity index, stock market, risk on, people are going to sell gold because they're inflating the crap out of the stock market, and maybe they think that the growth rate will be bigger there. Okay, so it isn't necessarily saying that gold is worthless. It's just saying it's just not worth as much as holding money in another asset. And if you're going to be conservative, then maybe it comes, you know, down here to 1623. Maybe it stays within range and looks at the 1685 price. But the reality is I don't see any reason why we can't get down at least into this, you know, the meat of this green area, 1615. Okay. There's a ton of political risk right now, so making a call on gold going crazy low is, you know, kind of a lot in my brain, because we're still fighting over the election here in the U.S. So you know, it's really hard to understand how far this might go, but just to give you guys another signal, reason why we may be headed further down, okay, this is our broken counter trend, because this thing has been falling primarily since July of last year. Early August, I should say. So since August, we've been on primarily a downstroke, and this might just be our next low down here at the 1615 range. Looks like actually, what does the actual tool say? Yeah, 1615.71 is really what we're looking at, our potential next low. That might be a buy opportunity. Okay, so a lot of people might look for that price, just set a pending order, make a trap for the market. At least that's what I like to think of it as. Because if we hit this price, it may be a hot stove for at least a short period of time that we get a little burst. $50 wouldn't be a crazy big move on gold. And maybe I use my other fib level as my protection. Okay, so if the market comes down, it's that 1618 level. You know, I may try to hit this, you know, quick bounce that could happen right there. But realistically speaking, this is a sell in my brain right now. Okay, so that being noted, okay, I may look for place to exit that's going to be reasonable. Okay, this is our current range that we're in with our tweezer bottom that happened recently, so my exit price might be down here. Actually, this is my well, one of my exits. That's where my stop loss may be. Where I might rip the tape on life and stop selling this would be at the bottom of this yellow box that we just drew. Okay, so if I have enough risk reward ratio to make this make sense right now, then, you know, maybe you do that. Personally, I don't think a great idea. I think we missed it. So my move would be to wait for a high price to happen so that I could sell. Maybe that happens up here. Okay, maybe we get a little bit of a reprieve. The market comes back up, I'll feel pretty good about entering as a seller up there. That's a pending trade opportunity, and I think relatively likely. So that may be what my move is here, because right now is not a good time. At least I don't think so. So all of that being said, I think that's about it for XAU today. I think obviously things can change quickly. There's always going to be big news. If we pass this big, $3.5 trillion infrastructure bill to go on top of the other $1.2 trillion infrastructure bill in the U.S., then very likely we see some pretty serious bearish activity on the USD. But if that doesn't happen, the market will do what it's doing. We have a tendency to want to change good things, though, here in the U.S. Oh, wait. Why did I just do that? Okay, so I just deleted everything on this. I was going to start over. But this is the Euro Aussie. This is what I had shown here. And I think we did we actually enter this one? Yeah, we did. We entered as a buyer here. But that is all of the opening trades. Silver, if you want to see silver as well. Silver is probably going to be bearish. And it is. Look at it go. Falling like a brick. Okay, and really where the big demand is on silver, as far down as silver could come, just so that you guys are aware. A lot of people don't think that this stuff is possible, but a lot of people don't realize, and I'll show you guys in a second here. This is really where the biggest demand zone is for silver. The best place to buy silver is really all the way down in here. And this price is not high. We're talking about 19 bucks. Okay? So that's really where I think silver is a buy with both hands. Okay, right now it could push way, way down, just like it did at the end of the last crash, okay? With the same government that we have right now. There's a lot of people that think Barack Obama is still in charge, mostly because Joe Biden can't put a sentence together. And I don't care what side of the fence you're on, and I'm embarrassed to say that as an American, but that's really just how it is. If you guys disagree, maybe you should move here and watch the news for a while. With that being said, I'm not here to talk about politics. I'm here to talk about what the outcome of those are, because we're here to try to make money, okay? And really, the market has two types of trends: lines and boxes, ranges and trend lines. That's really the simplest way to break down anything, any chart, I should say. Okay, so here's where our uptrend broke. Okay, and maybe we have a range up here as well. I'll draw the other range that I believe exists, because one of the day, I think that's the two most important types of trading strategies that are out there. Okay, boxes, lines. Okay, so our next turnaround could be soon. Could be down here at this, 23.75 price. That might be a scalp opportunity in the, really against what the trend has been for, really at least since May. Okay, so the last few months, this thing has mostly been down. So I'm not going to say buy at very many prices other than ones that the market's made big turns at before. So if you wanted to scalp this thing and maybe try to buy it, some traders may do something like this, okay, and just try to set a pending order down here. Okay, maybe have my stop loss below these other, these fuzzy elbows down here, all these other turnarounds that happened. And maybe I just look to get out at a very recent low, which might become future resistance. So that might be my exit. Okay, so this would be a very quick move. Obviously I want to be as tight as I can on my stop. Let's come down to the 4-hour time frame so you guys can see what this looks like. A lower time frame, but this may be where my trap is set. Down here at this place where the market turned around last time. Okay, because the market turned around there last time. So that said, I'm just going to try to play this little range that exists. Okay, because we had a turnaround at my green price above as well. Okay, so that's really all that this opportunity is about. And you can keep this thin. Obviously trading a CFD like silver, if you haven't done this before in your trading account, there's going to be more risk than there is with trading a currency cross, because they are more volatile and you get less leverage. Okay, so you're going to have more exposure, which, if you're good at this type of stuff, is exciting. If you're nervous about it, then try this in a demo first, because there is going to be more risk in trading things like silver or gold, stocks with leverage versus something like a currency, because there is an incredibly larger amount of volume on the currencies, and they're just not going to move as much. Bottom line. But we are coming to the end of the presentation here, folks. I do appreciate everybody joining us today. I am gonna ask you guys for a favor. If you guys can do me a favor, I feel like I've done some favors today. If you guys enjoy these sessions, the best way to support us is to go to Google, type in 123Trade, find our business, okay, and give us a review. Now, if you like these sessions and you want to support us, this is the easiest way for you to do it. If there's something that you feel like we're not doing for you that we should be, and I'd be surprised if we are. I mean, we don't charge any money for our service. So if there's something, that you want to talk about that's going to keep you from giving us 5 stars, let me know, okay? But otherwise, this is really the best way that you can help us. We have started to get some pretty good reviews in here. Most helpful, efficient, and willing to take the time to assist. These guys helped me get set up professionally, and so helpful that I just had to give them a shout out. Okay, so if you guys feel this way, tell people about it. Okay, so we want to have a positive impact on your trading career, and we'd really appreciate it if you told some people about it. But that said, we are at the end of the session here today. If you guys do have something screaming that you want to see next week, then by all means, send me an email, post in the Facebook group or in the Discord server. If you are watching this on YouTube, if you haven't already liked the video, click the like button because that's really the easiest way for you to support us in getting our message out. This session should be recorded. Let me go ahead and make sure that it is. It is recording. God, you had me panic there for a second, Diane. But yes, it is recorded, and I should have it posted here later today. Typically, we can get these things up by 2 or 3 o'clock. It generally just takes a lot of time to convert the video, make it 1080p, edit it, do all that fun stuff, and get it online. So I will have that posted in the Facebook group, Discord server as soon as I do that. If you are not subscribed to the YouTube channel already, the fastest way is just to subscribe. Is just to get all of these sessions recorded is just to subscribe. And actually, you can do that on our website. I didn't show this earlier in the presentation, but I probably could now. But if you come to the YouTube page here, then you can click on the subscribe button. It'll take you straight to the channel. And there's going to be lots of other videos on here. And I've actually got these in. There's other weeks as well. So if you want to go and watch 5 weeks of these, you can do that as well. But yeah, that's where you go to do that. And we've really been ramping this up here in the last couple of months, trying to get more good information for you guys. I'm going to hopefully be doing these market forecasts every week. So if you guys want to check those out, those are typically going to come out on Monday night, maybe Monday afternoon, depending on how quickly I can get the editing done. But really, I just want to give you guys an idea of what's going on in the world. I know that a lot of the news in the world is garbage. So that's why you see me lean on things like this, okay, this economic calendar that we looked at, because I don't really care what CNN or what USA Today or what the Associated Press or what any of those people think about what's happening with the economy, because I can read the numbers myself. And I can know what a good number is and what a bad number is. So I don't need some idiot at an American news station that nobody trusts to tell me if the economy's doing well or not. I'm going to come here and look at this. There's also, I do want to know what those people are saying. Okay, so we actually do have the news page here. This should be updating, pretty regularly with, news from around the world. So if you want to check this page out as well, we did launch that here recently. And I should actually have the ebook for the currency power pairs released here soon. So I know that a lot of people have been waiting for that. I've got to wait for web developer people to do complicated stuff to deliver things. But thanks everybody again for joining. If you haven't already given us a review, then hook us up. I look forward to trading again with you guys next week. I look forward to beating the market with you guys. And otherwise, enjoy your weekends. You be good or be good at it. Take care, folks.